Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at the dollar index because there is a trade idea that I have been monitoring for a while that seems to be playing out at the moment. If you guys remember, the dollar index has been in a downtrend for quite a while now as fears about peak Fed hawkishness ease in wake of easing US inflation data in the last couple of months. So we've had this pullback in the dollar, and recently we had the formation of this descending triangle, which I've just drawn up. Then we broke to the south of it. Now, more recently, we've rallied once again to retest it and to retest that 200-day moving average, which was acting as resistance. And we seem to be heading back lower again. Now, this is something that I was expecting. And I'm thinking by the end of the week, it's Thursday today, by Friday, we could probably retest these recent lows because it's going to depend on how this data pans out, but we do have this upcoming core PPI data on Friday and the preliminary University of Michigan Consumer Sentiment Survey as well on Friday, which has that key inflation expectations reading. Now, if those inflation prints surprise to the downside, then I think that could add further sort of tailwinds to this dollar decline. You can see here the RSI showing that the dollar is quite oversold, but not in that area below 30 where people might start really thinking about buying just because the dollar's getting too oversold. So there does seem to be a bit of room to run to the downside. At least from the RSI, you'd think we could probably push in towards the 102s before it got oversold again. In terms of other risk events that we've got coming up as well, if I just skip ahead to next week, you can see the CPI, US CPI data out next Tuesday. That's the more widely followed one, of course, over the PPI. And then the Fed policy announcement as well, next week as well, with new economic projections, a new dot plot, which is where the Fed members basically put where they expect interest rates to be in the coming quarters and years. And then obviously Powell's press conference as well. Now, the Fed, or Powell at least, tends to try to sound hawkish because he doesn't want markets to get overly exuberant, which would cause an easing of financial conditions and make it more difficult for the Fed to reach to bring inflation down. But the Fed clearly has pivoted towards being less hawkish. So that is something to watch. That's the sort of theme we're going to be thinking about. Interest rates are going to be risen to 4.5% from 4%. Where is the peak in interest rates? Markets seem to be thinking it's about 5% at the moment. But if we get further downside inflation surprises, that peak could be lower, which I'm thinking could weigh on the dollar. So, this dollar decline trade, it depends on things sort of falling into place, which might not be the case. We do have rising fears about a global recession, which can trigger some safe haven demand for the dollar. But if ultimately it results in Fed easing, then I think we're going to have this long-term downside in the dollar as US yields fall and as that rate differential advantage that's been benefiting the dollar so much throughout most of 2022 gets unwound. But anyway, guys, that's the video. Hope you all enjoyed it. Hope you found it informative, and I will see you all in the next one.